people are sort of have short memories, so they forget the previous halving cycle had 3 tops. So you had like a 64,000, a 69,000, and then a bit of a bear period, and then 73.5 right before the halving. So here we are, we're about the time of the first 2 tops. Maybe we'll get another one, right, in this cycle. So who knows?
When are we going to
very hard to predict the timing, but I certainly think, the 7-figure, the 500K to $1 million Bitcoin is closer than people think, actually.
Satoshi just called it. Not only is Bitcoin going to $1 million, it could happen much sooner than most people expect. Now, of course, Satoshi Nakamoto, the pseudonymous creator of Bitcoin, remains unknown. But this bold prediction comes from someone many believe could be the closest thing we have to Satoshi himself. Adam Back, CEO of Blockstream, is one of the most respected cryptographers in the world and a key figure in Bitcoin's early development. His work on Hashcash directly influenced Bitcoin's creation, and over the years, he's repeatedly been named as a leading candidate behind the Satoshi identity, something he has consistently denied. In a recent interview, Back breaks down some of the biggest questions facing Bitcoin today. He explains why the so-called quantum computing threat is likely still decades away, why the network should still prepare now, and how new cryptographic upgrades could make Bitcoin future-proof. He also dives into market structure, institutional adoption, ETF flows, and why he believes the path to $500,000 and even $1 million Bitcoin is much closer than most people think. But what makes this conversation so important isn't just the long-term price target, it's the reasoning behind it, the shift in who is buying Bitcoin, how supply is being absorbed, and why the current cycle may not play out the way many expect. In this video, we're going to break down Back's insights on quantum risk, market dynamics, institutional demand, and the real catalysts that could push Bitcoin into 7-figure territory sooner than expected. If you want clear, high-level breakdowns of where Bitcoin and the global financial system are heading, make sure to like the video, subscribe to the channel, and turn on notifications so you don't miss what comes next. Buy $10,000 of Bitcoin on a regular exchange. It grows to $60,000. That $50,000 profit? You could owe $10,000 or more in capital gains tax. Now do the same trade inside a Roth IRA with iTrustCapital. That growth? Tax-free. You keep the full $50,000, same crypto, completely different outcome. iTrustCapital lets you hold crypto in a self-directed IRA, trade 24/7, and secure your assets with institutional-grade custody. You can also hold gold, silver, and stake certain assets. Real U.S. customer support. $100 bonus when you fund through the link below. In crypto, structure beats timing. Every time. Thanks, and enjoy the video.
How many months before quantum cracks Bitcoin?
Many. I think it's probably still a couple of decades out, but it really depends on how the physics research, progresses. But, just to say that today, the current state of the hardware is effectively at the lab experiment stage, where they are trying different physical architectures. So different ways to construct qubits, different ways to manage the error correction, different error codes. So really wrestling with the basic functions. And I think, the thing to watch for is a repeatable architecture where they start to be able to scale it. So that hasn't happened to date. And I went to some university courses when I lived in Montreal in the early 2000s. And some of the Montreal universities had the top global researchers on quantum topics. So I was loosely tracking the quantum hardware progress for interest since, and it's like 25 years ago, right? So, and really the progress has been quite incremental, more linear, not exponential, like with the silicon chips. So I think that's what people are looking for, is when they converge on some scalable architectures and they start to progress at beyond linear pace and answer some of the key technical hurdles. So, but in any case, I think for Bitcoin, we don't really have to, reach agreement, and there's some unpredictability about the future progress. The defensive and, safe thing for Bitcoin is to prepare implement and deploy upgrade mechanisms so that people can become quantum ready. And, that gives people a long time to migrate. And if it turns out it's shorter, they can hurry up and migrate, but they'll have the method to do so, and they'll have the safety of, a system that has been well peer-reviewed, right? So another context is the NIST standards, so the National Institute of Standards and Technology, which puts out standards for cryptography, amongst other things. It was only in 2024, that they introduced the first post-quantum signature standard. And so these hash-based signatures that they standardized on date back to 1979, to Leslie Lamport's Lamport signatures. And so these new signatures are optimized versions of that, which is good because it's using hashes, which are very understood, reliable building block. And it's a conservative design, which has withstood, what is that, like 40 years or something at this point, 45 years. So that's the right kind of characteristic. And now the NIST standard signatures are quite large, many kilobytes. So what Blockstream research has been doing, and other researchers, is trying to optimize them for the Bitcoin specific use case. So we put this proposal called Shrinks, which results in a 324 byte signature, still bigger than today's 64 byte Schnorr signatures, but not, manageable. And we also implemented that in Liquid, the Bitcoin layer 2, so that people can try it out. So, we'll see how the kind of applied research progresses, but that's currently probably the main contender for an initial Bitcoin opcode proposal as standard. I think the other interesting thing is the way that people would use that today is they would actually continue using Schnorr signatures, but use a feature of Taproot where you can have an optional additional way to spend that you don't use today, but you have the option to use in the future. So that's a way to, otherwise people may be disincentivized from using it because they don't want to pay the fees for a large signature today. So they could be ready, so quantum ready, without paying the costs today. So I think that's better for adoption, actually. The markets don't like uncertainty, and also the specialized markets can have information asymmetry, which is to say, the people who understand the fundamentals have a very confident view, but the wider audience of traders are listening to Bloomberg and CNBC, and they may react to uninformed media output, let's say, right? And so that can impact the market short term. Usually the smart money, fills it in. But I think also the institutions are more systematic about risk management. So they actually realize that there's a low probability long tail risk, but they still want to understand what is the risk and is there a way to address the risk? And so they actually care about that kind of thing. But I don't think they're panicked. They just they feel they have the obligation to understand the risks and understand the responses to the risks.
Do you get sick of being asked, though, if you are Satoshi?
Well,
or you just embrace it now?
No, the thing is that I understand the fascination, right? Because, in 2008, when they got the email, it just literally didn't occur to me that this was a pseudonym, right? I thought it was just a researcher, and that was his actual name, and it's a Japanese descent guy who was building something using the Hashcash algorithm and had read one of my papers. And so, I think that later, like everybody, it becomes a fascinating subject. And so you start brainstorming about, well, who do I know that works in eCash or cryptography or programmers who could plausibly be this person? And you'll have, everybody has their pet theories, like, well, it wouldn't have been that guy because, you interacted with him in the past and he made some other technical mistake, or he wouldn't have done this. So it's like everybody's got their theories, right? So and I think it's actually kind of positive for Bitcoin that it's this sort of mystique that's part of the backstory.
Back's comments on quantum computing cut through a lot of the noise that's been circulating in the market. While headlines have suggested that Bitcoin could be at risk within the next decade, his view is far more grounded in reality. The technology, as it stands today, is still in an experimental phase, far from the kind of scalable, reliable systems needed to threaten Bitcoin's cryptography. Progress has been steady, but slow and incremental, not exponential. And more importantly, the industry isn't standing still. Work is already underway on post-quantum cryptographic upgrades that would allow Bitcoin to adapt long before any real threat materializes. What matters here is not just the timeline, but the approach. Rather than reacting to fear, developers are building optional upgrade paths that allow the network to evolve without disruption. That kind of forward planning is exactly what institutions want to see: measured risk management, not panic. And while short-term market sentiment can be shaken by uncertainty, the bigger players are focused on whether risks can be mitigated. In Bitcoin's case, Bakkt makes it clear they can. And that brings us to the bigger picture, because while many are focused on hypothetical future risks, the real story is unfolding right now in the market itself. Here's Adam Bakkt's price outlook for Bitcoin in 2026 and why he believes we could hit 7 figures before the end of this halving cycle.
Well, I mean, short term, Bitcoin is like quite unpredictable, but it does kind of look like that was the bottom probably. And there are quite a few repeat buyers at these levels. The ETFs, and of course, the BlackRock ETF has actually net increased Bitcoin this year, inflows. Got the Morgan Stanley ETF, which has just started at a fast start. And then you've got, the treasury companies. So MicroStrategy's stretch products, it's kind of money market, high interest money market like products, kind of implicit over collateralization by Bitcoin reserves of the company is, they started with convertible bonds, then convertible notes, and now these preferred listed stock. And they had like 5 different versions, the Strike, the Stride, and so on. And really the one that sold the best was Stretch. But it's really been accelerating in the last month, so that they've actually finally been able to do a week of stretch selling without selling any Class A shares by ATM and funded, like 10,000 Bitcoin purchases and stuff, right? So their kind of repeat buying is a multiple of the daily mined coins, and they're not the only buyer, right? They got the ETFs. Now, of course, you do have some sellers, because for every buyer, for every seller, there's a buyer. So who's selling is the bigger mystery. But you see occasional hints, right, that the Marathon, one of the public listed miners, sold 15,000 Bitcoin to finance, pivoting into AI because it had a higher profit margin. I think, all of the big bankruptcies that came, in the previous couple of years have largely sold because they typically sell to dollars or local currency for a reference price. So, the FTX, the other bankruptcies, I think they're all out of the way. And then you've got, I think the other thing that may partly have caused the sell-off from the 120,000 level is historically the 4-year halving cycle, there's been a point at which the market turns and you get the bear market. And it's been like relatively consistent.
Do you think that's still relevant? Because a lot of people were last year debating whether that 4-year cycle is even relevant now.
So I think the fundamentals mean that it should be less relevant, but nevertheless, the timing, some people would just sell anyway because they think it might happen, and then they cause it to happen. And then the price falls, and other people defensively, go to cash to find out where the bottom is, and then they'll come back in maybe, right? So it may have been some of that. The Bitcoin market is highly reflexive. So if the price is down, the price is down because the price is down and people are selling, and then the price is up, they're buying, right?
Yeah.
So
yeah.
all momentum effects. And there is actually some technical reflexivity, which is when the Bitcoin price is low, the miners have to sell a bigger proportion of the coins they mine to cover the electrical costs.
Yeah.
And when the price is higher, they don't have to sell as much. So as soon as you get like a little bit of a higher price, mining gets profitable, more profitable, and they keep more of the coins, so there's less sell pressure. So, higher price immediately translates into less sell pressure, right? So you do get some kind of rebound potential. Plus, I think there's a slow burn, which is the institutional follow-through.
Yeah.
So, we heard a lot about model portfolios, managed funds, mutual funds, but I think those, there've been announcements about them, but I think they are slow moving in terms of, developing the playbook, doing the legal and accounting work, selecting their custody partners, training their salespeople. It all takes months and, half a year, 18 months. And so I think it's still coming. And it's a big allocation of money in there because most people are not managing a stock portfolio. So their savings are indirect via managed funds. So, they'll have a pension fund, maybe that's managed by a professional money manager. You have a life insurance. So these kinds of things, or an annuity mortgage. So a lot of the money in the world is managed in this way. And so I think, as Bitcoiners, we would like everybody to benefit from Bitcoin. And indirectly, the way probably most people will benefit from Bitcoin is by the professional money managers adding it to the model portfolio. So it's not a 60-40, but it's a 30, 50, 20 or something, and 20 is Bitcoin, right? And so, as you get there, also that will change the picture and bring a lot of money into Bitcoin. And then I think the other thing that affects the price is the stickiness of the investors. So we didn't know with the ETFs if the investors are going to be like the usually what happens in each cycle is you get new investors who are not, they're not traders, they're not professional investors. They buy when the price is high, and if it falls a bit, they panic sell. So we didn't know how the ETF buyers would act, but they've been fairly long-term view. They haven't sold much. So that's positive because, the more sticky the investors are, the bigger a multiple you get, a money multiple you get. The billion in affects the market cap by more than $1 billion, right?
Yeah. What actually needs to happen in these next 4 years for Bitcoin to reach $1 million in 2030?
Not much. I think just the market dynamic could do it with the current demand almost, right? I think this halving period so far, in my view, could have done that just from the new retail interest and new ETFs, even without the institutions. So we'll see how it evolves. People are sort of have short memories, so they forget the previous halving cycle had 3 tops. So you had like a 64,000, a 69,000, and then a bit of a bear period, and then 73.5 right before the halving. So here we are, we're about the time of the first 2 tops. Maybe we'll get another one, right, in this cycle. So who knows? It's and as you said, there are new types of buyers in the market now, and people can only sell once. So
exactly,
as you get this kind of consolidation phase where some people are leaving and some new stronger hands are absorbing the Bitcoin. So
what year do you think then, Adam? When are we going to hit $1 million?
Very hard to predict the timing, but I certainly think, the 7-figure, the $500K to $1 million Bitcoin is closer than people think, actually, personally.
The next 24 months?
Potentially, yeah.
Awesome. Thanks so much, Adam. I appreciate it.
Actually, I have a bet on with somebody that a couple of bets. One is that Bitcoin does that by the end of the halving cycle, which is 2028. And another one that Bitcoin market cap reaches parity with gold's market cap, which is a bit more of a dangerous bet because gold has been, grown a lot in value in the last period, right?
For the first time, Bitcoin isn't being driven purely by retail speculation. Instead, you have sustained, repeatable demand coming from ETFs, institutional allocators, and corporate treasury strategies. These are not short-term traders, they are structural buyers. And when that kind of capital enters a fixed supply asset like Bitcoin, the impact compounds quickly. At the same time, sell-side pressure is changing. Miners sell less when prices rise. Long-term holders are becoming more sticky. And many of the forced sellers from previous cycles, bankruptcies, distressed entities, have largely exited the market. What's left is a tightening supply environment meeting a growing wall of demand. That's the foundation for Bak's conviction that Bitcoin doesn't necessarily need a dramatic new catalyst to reach $1 million. The mechanics are already in motion. Even at current demand levels, the post-halving supply shock alone creates upward pressure. Layer on top of that institutional adoption through model portfolios, pension funds, and managed capital, and you begin to see how quickly things can accelerate. To put it into perspective, moving from today's levels to $1 million Bitcoin isn't just a price increase, it's a revaluation of Bitcoin's role in the global financial system. It implies competing directly with gold as a store of value, absorbing trillions in capital from traditional markets, and becoming a core allocation in diversified portfolios worldwide. And if that happens, it won't just reshape crypto, it will reshape how capital itself is stored, managed, and transferred globally. But as Back points out, timing this is incredibly difficult. Bitcoin doesn't move in straight lines. It moves in cycles, driven by liquidity, sentiment, and reflexivity. What he's suggesting isn't a guaranteed timeline, but a shift in probability. The idea that $500,000 to $1 million Bitcoin is no longer a distant theoretical outcome, but something that could realistically emerge within the next phase of this cycle. The question now isn't just if Bitcoin gets there, but how quickly the market reprices once it fully understands what's happening. If you found this breakdown valuable, make sure to like the video, subscribe to the channel, and let me know in the comments, do you think Bitcoin hits $1 million this cycle, or does it take longer? Thanks for watching, and I'll see you in the next one.